Choosing a financial advisor is one of those decisions that can have a major impact on your money, your retirement, and your peace of mind. But here's the problem. The term financial advisor can mean a lot of different things. Some advisors focus on retirement planning. Some focus mostly on investments. Some specialize in taxes, insurance, estate planning, or business owners. And unfortunately, not every person calling themselves a financial advisor is required to put your best interests first. So in this video, we'll break down what to look for, what questions to ask, and how to avoid the biggest red flags when choosing a financial advisor. Let's get started. Before we get into the details, here's the first thing to understand. Hiring a financial advisor does not mean you stop paying attention to your money. A good advisor should guide you, educate you, and help you make better decisions. But you still want to stay involved. At the end of the day, no one will ever care about your financial future more than you do. So when does it make sense to hire one? You might consider working with a financial advisor if you're approaching retirement, managing a large investment portfolio, dealing with a major life change, inheriting money, selling a business, trying to reduce taxes, or simply feeling overwhelmed by all the moving pieces. The more complex your financial life becomes, the more valuable good advice can be. But the key phrase is good advice. So let's talk about how to find it. First, look for credentials. One of the most respected credentials in the financial planning world is CFP, which stands for Certified Financial Planner. A CFP professional has completed education requirements, passed an exam, has experience, and must follow ethical standards. That does not mean every great advisor has to be a CFP. But if you're looking for holistic financial planning, retirement, taxes, investments, insurance, estate planning, and long-term strategy, CFP is a strong credential to look for. Other credentials may also matter depending on your needs. A CPA can be especially helpful for tax planning. A CFA is often more focused on investment analysis. Some advisors may have insurance-related credentials which can be useful, but you want to understand whether they are primarily giving advice or primarily selling insurance products. That brings us to the second point. Understand how the advisor is paid. This is one of the most important questions you can ask. Some advisors are fee-only. That means they are paid directly by you, often as a percentage of assets managed, a flat fee, an hourly fee, or a planning fee. Others earn commissions when they sell certain products, and some operate under a hybrid model. The issue is not just how much they get paid. The issue is whether their compensation creates conflicts of interest. So ask directly, how are you compensated? And don't settle for a vague answer. A trustworthy advisor should be able to explain their fees clearly, in plain English, and ideally provide them in writing. Third, ask whether they are a fiduciary. A fiduciary is legally and ethically required to act in your best interest. This matters because not all financial professionals are held to the same standard. Some only have to recommend products that are considered suitable. Suitable does not always mean best. So one of your first questions should be, are you a fiduciary at all times? That last part matters. At all times. Some professionals can act as fiduciaries in one part of the relationship, but as brokers or salespeople in another. You want clarity before you trust someone with your financial future. Fourth, understand where your money will be held. A major red flag is if the advisor personally takes custody of your money. In most cases, your assets should be held at an independent, reputable custodian, for example, a major brokerage firm, and you should receive statements directly from that custodian, not just from the advisor. A legitimate advisor may have limited authority to manage investments or deduct agreed upon fees, but they should not be able to freely withdraw your money. So ask, who will have custody of my assets? If the answer is unclear, slow down. Fifth, make sure the advisor actually works with people like you. An advisor who mainly works with ultra high net worth families may not be the right fit for someone just starting retirement planning. An advisor who specializes in business owners may not be ideal for a young professional trying to build a first investment plan. Ask them, what does your typical client look like? You want their answer to sound familiar. Your stage of life, your goals, and your financial situation should match the kind of work they do every day. Sixth, pay attention to communication style. This is underrated. Some advisors are very technical. Some are big picture. Some are teachers, some are more transactional. Some will meet once a year, while others provide ongoing planning and accountability. You need to know what kind of relationship you're looking for. Do you want someone to help you make a one-time decision? Do you want a long-term retirement planner? Do you want someone who will challenge you, hold you accountable, and help coordinate your entire financial life? There is no single right answer, but there is a right fit for you. Seventh, watch for pressure. If an advisor makes you feel rushed, confused, or pushed into a product, that is a red flag. A good advisor should educate first. They should explain your options, help you understand trade-offs, and give you room to make a decision. If every conversation seems to end with a product pitch, commission-based recommendation, or urgent deadline, be careful. Before choosing a financial advisor, here are a few questions worth asking. Are you a fiduciary at all times? How are you compensated? What credentials do you hold? Who will custody my assets? Do you or your firm sell proprietary products? What types of clients do you usually work with? What is your investment philosophy? How often will we communicate? And what services are included beyond investment management? The goal is not to interrogate someone. The goal is to understand whether they are qualified, transparent, and aligned with your needs. And if you don't want to start from scratch, one option is to use a matching service. We've included a link in the description and a QR code on screen for Wiser Advisor. Wiser Advisor connects you with trusted, vetted financial advisors that meet your requirements. You can get started, interview 2 to 3 true fiduciary advisors near you, and there's no obligation. So if you're ready to compare advisors and start your search, click the link in the description or scan the QR code on screen. The bottom line is this: choosing a financial advisor is not just about finding someone with a nice website or impressive title. You want someone with the right credentials, a transparent fee structure, a fiduciary commitment, a clear planning process, and experience helping people like you. The right advisor can help you make smarter decisions, avoid costly mistakes, and feel more confident about your financial future. But take your time. Ask questions. Compare your options. Because when it comes to your money, the person you choose matters. And before you go, if this video helped you better understand how to choose a financial advisor, please hit the like button. It helps YouTube know this kind of content is useful and helps more people find the video. And if you want more simple, practical explainers on retirement, investing, taxes, and personal finance, be sure to subscribe to the channel. Thanks for watching, and I'll see you in the next video.